You know, for over 2 centuries, the New York Stock Exchange has been the very symbol of American finance. It's a place with a clear opening bell and a closing bell. But what if that closing bell never rang again? Well, a recent move by the NYSE suggests we might be heading towards exactly that future. So let's explore this tectonic shift happening on Wall Street.
Right, so when you picture the stock market, you probably picture this building. It's an institution that's built on tradition, a physical place with very set hours, running on systems that, yeah, they're reliable, but they're decades old. It's a world that literally shuts down overnight and on weekends.
But let's be real. We live in a 24/7 world now. You can order food, you can watch movies, connect with people at any hour of the day or night. So it kind of makes you wonder, right? Why don't our financial markets operate the same way? What if you could trade stocks at 3 a.m. on a Sunday?
Well, that question isn't just hypothetical anymore. The NYSE has made an announcement that could fundamentally change how we think about trading. Let's get into the details of this pretty major move. Okay, so here's the headline. The NYSE is building a brand new platform to trade something called tokenized securities. And the key features here, it would operate 24/7 and use blockchain technology. Yep, the same secure digital ledger system that powers cryptocurrencies. Now, of course, this all hinges on getting the green light from regulators.
So that brings us to the crucial word here, tokenization. It sounds complex, I know, but the idea behind it is actually pretty straightforward. And this is the tech that makes a 24/7 market even possible.
Okay, in simple terms, tokenization is kind of like creating a unique digital deed for an asset. So instead of a paper certificate or just a line in a broker's database that says you own a share of a company, you'd own a secure digital token on a blockchain that represents that exact same share. So how does this actually work in practice? Well, first, a company issues a stock, just like it always has. Nothing new there. Then a digital token gets created to represent that stock on a blockchain. And finally, you, the investor, can trade that token directly with someone else anytime, anywhere, without having to wait for the market to open.
Now, to really grasp how big a deal this is, let's compare it to the system we have right now. Because this isn't just an upgrade, it's a complete reimagining of how trades happen.
So this new system introduces 2 really key differences that could completely revolutionize trading: when you can trade and how quickly that trade is actually finalized.
And the contrast is pretty stark. The old world is strictly 9:30 to 4 Monday through Friday. This new tokenized platform, always on. But the even bigger change might be settlement. Right now, when you buy a stock, the cash and the shares don't actually change hands until the next business day. With tokenization, it's instant. And here's why that delay really matters. That T+1 lag forces brokers to hold these huge amounts of capital as insurance, just in case a trade fails. That's money that's tied up and could be used somewhere else. In fact, this exact issue was a key factor behind that controversial decision to halt trading in stocks like GameStop back in 2021. Instant settlement could make problems like that a thing of the past.
But here's the thing, the NYSE isn't going it alone. This isn't just one company making a bold move. It's an entire industry that's leaning into this new technology, and that signals a much bigger trend. We're talking about the biggest names in finance. Giants like JP Morgan, Goldman Sachs, and BNY Mellon are all developing their own tokenization projects, especially for things like money market funds. This is a super clear signal that Wall Street sees real potential here.
So the crucial point is summarized perfectly by Professor Campbell Harvey of Duke University. He says tokenization isn't just a trend, it's a technology that actually solves long-standing problems in financial markets. He even calls tokenized stocks the lowest hanging fruit.
Okay, so we've covered the what and the how. But what does all of this actually mean for you, for companies, and for the future of investing? This is where we get to the big so what question.
And like with any major new technology, there's a ton of promise, but there are also very real risks and questions that need to be answered. It's really a classic 2-sided coin. So on one side, the promise is huge. Advocates argue it could make it way easier for companies to raise money and give more people access to the markets. But on the other side, skeptics, including some lawmakers, are worried about the potential for new types of scams. And then there's the biggest question mark of all, navigating the regulators like the SEC, who are going to have the final say on all of this.
And that brings us to our final thought.
Look, the New York Stock Exchange embracing this technology is a massive step, but it really makes you wonder just how far this whole thing could go. Are we on the verge of a future where ownership of, well, everything, from a share of Apple to a piece of your local coffee shop, is represented by a digital token you can trade anytime, day or night? Only time will tell.